market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. This, of course, we're in London, and this is the final day of a big week when we had a lot of earnings. Now, quarterly results from Amazon and Apple have capped off a big week of earnings. Apple tumbled more than 6% in extended trading, and supply shortages hurt its sales forecast. Meanwhile, Amazon jumped in late trading after reporting a fifth straight quarter of cloud revenue growth. For more, let's bring in Bloomberg's Neil Campling. Neil, there's a lot going on, and then in a second we'll also speak to Jari Stehn about the overall impact this has on the economy. But Amazon had some pretty strong revenue and capex. So how well positioned are they to get through the AI build out and build on that in the future?
I think, Fran, the main thing is that there's comfort for investors in that the investments that they're making are paying off through the growth rates you're seeing in AWS. So AWS grew 37% year on year, the fastest year on year growth rate in 5 years. So it's delivering on that side. Clearly, it comes at a cost in terms of a significant amount of capex. But to put it in context on one of the measures, if we look at capex to sales as a measure, then they actually are at the lowest end relative to the other hyperscalers. 26% of capex to sales is their ratio. And by comparison, Alphabet is at 50%, Meta is at 60%, and Oracle is at 97%. So in that respect, they have the balance sheet, if you like, or the investments to pay off with that growth coming through.
So, Neil, news of supply shortages are really hitting Apple's results as Tim Cook departs. So what does this tell us about how the firm is actually adapting to this AI era?
They've actually built up a lot of memory, which they're now actually having to use their internal inventory. That's going to impact in terms of pricing. It may impact volumes down the line. One of their suppliers, Qualcomm, had similar caution the previous evening. But I suppose for their positioning, they're waiting to see which of the AI models, if you like, win out in the battle. And then I suspect they will then sign a deal to lease, if you like, the capacity and that compute down the line. But in the meantime, clearly, us as consumers, I think, are likely to wear higher pricing of the products when Apple can get those to market. But it was a surprise to hear that the company with the greatest purchasing power of components in the world is struggling for supplies and is unable to get as much memory and components as it needs.
Neil, thank you so much. Neil Campling there with the very latest, of course, on AI. And it has been quite a week. Also, Ken Griffin's Citadel has swooped in to buy the bulk of AI stocks held by Situational Awareness, the hedge fund led by former OpenAI researcher, once described as the Nostradamus of AI. Now, Leopold Aschenbrenner started the hedge fund 2 years ago, despite having no investment experience. Now its assets have plunged over the course of this month after a sharp decline in AI-related stocks. It's a story that's one of our most read on the Bloomberg terminal. Let's get straight to Nishant Kumar, Bloomberg's hedge fund reporter. Nishant, I mean, this is a fascinating story. It's a complicated one, but what actually happened here? How did, a fund go from 45 to 10 billion in a month?
So I would say in days, actually. So at the core of this is really the leverage story, the money that hedge funds borrow from banks to supercharge their returns. Banks were lending this fund like 4 to 5 times its capital. And this fund built a massive position in AI that became even larger with this leverage. Then the tech share started to slide and lenders wanted more collateral. And the fund had to sell into a falling market to meet those calls. And the rest, as we say, is history. One thing I would like to highlight here really is that despite all this thing, and this took just days, for all that, the fund lost about 67%, but it's still up 80% on the year. So that goes on to tell you how massive the rally in AI stocks has been this year.
So is this a one-off? I mean, we're also really interested because, of course, Citadel had to step in. But is this a one-off or is it a warning sign about something uglier brewing?
Well, it's what's separating the two things. One, prime brokers were already differentiating on single sector concentration. Barclays, for example, turned the fund away on exactly that. Two, the fund is still standing and still one of the largest equity hedge funds in the world focused on AI. It still holds more than $5 billion worth of Anthropic stake. So this is really a leverage story more than a verdict on the AI trade, I would say.
So why did Citadel step in? What did Ken Griffin get out of it?
Well, I mean, Citadel ends up with stake in major AI companies at a price that was not on the table, just a week earlier. So that shows how powerful even these large multi-strats have become in the market. There is a very short list of firms that can absorb billions of dollars of stock in days. And calls went out to several of his peers, like Millennium looked at it. So did Gen Street, the powerful prop trading shops, which is also one of the investors in situational awareness. Citadel heard about it. They negotiated a deal. It got a discount and bought the portfolio. And it seems the AI trade is back up today.
Nishan, thank you so much. As ever, Nishan Kumar, there, our hedge fund reporter, on this very, very readable story to try and understand what's coming up next. Now, earlier this morning, the Bank of Japan held its policy rate steady after officials took the rare step of wading back into the currency market with apparent help from the U.S. Here in Europe, the BOE kept UK interest rates steady, with the governor, Andrew Bailey, insisting his committee is not getting close to a hike. Well, with us this morning, Jari Stehn, Chief European Economist at Goldman Sachs. Jari, as always, thank you so much for joining us. It's just a lot of data to get through with central banks that are going in very different positions. I mean, let's start with Japan and just in general what we're seeing in Asia. Is this, where does this end up?
Yeah, we think it ends up with higher rates in Japan. I think that's pretty clear. We didn't get an awful lot of news, I would say, overnight. Yeah. There was emphasis that there's upside risk to inflation, but I think there's also a little bit of caution not to overdo the speed of the rate hikes, because you want to make sure that demand can recover and you can get back to 2% sustainably. And so we think the BOJ is still on a semi-annual hiking pace. We expect the next one early 27, another one mid-27. Of course, this can shift around depending what happens with energy prices. But we think it's a pretty sort of in-line, steady pace type of message.
Yeah, what did you make of the Fed? I mean, this was the big one where you saw Kevin Warsh. I mean, people are now saying, well, maybe he's not as credible as we thought. And I don't know whether there's, this is a correction course or whether it was on purpose, whether it was just like teething problems.
I think the main thing is very little guidance. So no hike, no guidance, no change to the statement. I think that was the broad takeaway, that we are in a different era now of Fed communication where you get much less guidance coming into the meetings. There's sort of, bigger surprises on the day, more information revealed through the decisions. That said, we think he did lean dovish on some of the things he did say. That wasn't an awful lot, but the things that he did say, we think leaned a little more dovish. For example, he downplayed some of the inflation pressures from AI. He mentioned a couple of times that the market is actually doing some of the tightening for the Fed. And so, we read all of this as there not being urgency for them to raise rates. Now, what happens in the end obviously depends on what happens with inflation. And here we have a more dovish view. We think that inflation is being propped up by a number of things that are more likely to drop out in coming months, including still pass-through from the tariffs, some effects from AI, some energy pass-through, and so on. And so we have them on hold through the rest of the year.
So, but is there a danger that actually if they're too slow, then they'll have to hike by 50, which is quite a lot?
I'm not sure I would worry about that so much. I mean, again, it depends what happens with energy prices. We obviously have lots of risks still out there. But when we look at wage growth, for example, when we look at the labor market, when we look at underlying inflation dynamics in the U.S., it looks more benign than concerning to us. And of course, rates are still restrictive in the U.S. And as a result of that, we don't think there's an awful lot of urgency.
Yeah, what's your take on the Bank of England? So I was in the press conference, then I had an interview with Governor Bailey, and he was really pushing back. I mean, it was almost like he was making sure that nothing was being priced in the market.
Yeah, I mean, at first sight, the vote split was more hawkish, so most people had not expected Catherine Mann to dissent. But then the rest of it, we think, was more dovish. I mean, they emphasized a few times that the underlying inflation trend has been softer in the UK. I mean, we very much agree with that, but I think the way they emphasized it, it also turned up in the inflation projections, of course, that were lowered. He then, pushed back against the idea that the Bank of England is getting ready to hike. I think he said pretty clearly that the sort of modal view is for rates to be unchanged. And then I also thought in some of the paragraphs, for example, Lombardelli kind of indicated that the decision was not close for her. There have been some questions about her maybe shifting. And then Dave Ramsden talked about, yes, potentially having to hike if there are upward pressures, but he also talked about potentially having to cut. So we thought that the broader communication was on the dovish side and consistent with the idea that they're not hiking. And our forecast continues to be that they're on hold.
But Jari, how difficult or how complicated it is for the Bank of England to also deal with the fiscal? I mean, we're going to have a big budget event, right, at some point in the fall because of the new government. And this is something that, we know from the Bank of England governor that he met with the Chancellor, but of course he wouldn't give us any indication of what they talked about.
Yeah.
Could that complicate things significantly for them?
It might. I mean, obviously, for now, all they can do is wait. So there's a lot of time left. We don't, a lot of sort of moving pieces in the fiscal story, and they will obviously see what is announced, then kind of run the numbers and then respond to it. The risk ultimately is probably in the direction of more spending and slightly higher deficits. So the way we think about it is that this is something that could support demand more than expected over the next year or two. But I think the hurdle for that to push the bank into hiking, we actually think is pretty high, because if you were to deliver more spending as part of the budget, gilt yields would probably also rise. They wouldn't probably like that. And so you would already get a tightening of financial conditions. And for the bank then to hike on top doesn't seem all that plausible to me. So I could see how it could push back the eventual cuts. So we do actually think that next year the bank is going to resume the cuts. So that could get pushed back. But I think the hikes are really much more related to the energy risks, second-round effects on inflation. And so far, we're not seeing any of that.
Yeah, I mean, it was striking for me this week that actually the difference between the German, and bonds and actually gilts was quite watchable. I mean, you kind of saw, are gilts being punished because the UK is not getting a handle on inflation?
I mean, gilts have carried an excess risk premium, term premium for some time, right? So when you just look at, even if you just look at 10-year yields, you see that the UK is carrying a much higher premium. Now, some of that is probably related to remaining inflation uncertainties, also the bank having restrictive rates relative to the ECB, so that's probably some of it. But there are also more worries around the fiscal situation, the pressures that the budget is under. We ultimately think in the near term this will probably remain. Certainly as we sort of run into the budget, we learn more about the burn and fiscal policies. But ultimately that risk premium in the UK relative to other countries like France to us looks too high. Because of the French elections, or just because of the situation in Europe? Both. I mean, it's on both sides. I would say on the UK side, the sort of fiscal outlook, is challenging, but I don't think is as bad as the markets are pricing it, because potential growth, we think in the UK, for example, is higher than in Europe. There are also some positives that people don't talk so much about, like AI. The UK, I think, will be able to benefit from that quite a lot. More than Europe? Probably, yes. I mean, it's more services-oriented, has a strong innovation R&D base, life sciences. So I think there are a few things that should actually play in the UK's favour relative to a sort of a more traditional manufacturing base like in Germany. But then also on the European side and the French side, there are obviously fiscal risks and concerns there. And so I think, relative to that, we think gilt sort of over the sort of next year or so should look more attractive. Jari, what do you think the ECB does next? I mean, there's always these rumors that come up also about Christine Lagarde, whether she stays and she doesn't. I don't know whether that actually would be a market event. I'm not so sure. I think that's a little bit of a distraction for me from the main issue, which is how much does the ECB need to raise rates to contain the inflation pressures. That, I think, is really the focus. I think it looks very likely that they will hike again in September. when we look at the renewed spike in energy prices, when we look at the resilience of growth, and then also the commentary. Again, Lagarde didn't say much last week, but there were a few hints here and there that. So I think September is very likely unless something changes fundamentally. But beyond that, we're more skeptical that more rate hikes are really needed because the incoming inflation data to us looks reasonably benign. You're not seeing pressures on the wage side, for example. And I think taking rates restrictive into the adverse energy shock, I think will not have a huge amount of support on the Governing Council unless something changes. And so our view is the hike in September to 2.5%. They keep a hawkish stance, but then wait and ultimately stop there. And so relative to what's priced, because we're pricing 2 more, that seems like quite a lot to me.
Okay, thank you so much, Jari, as ever, for joining us. Jari Stehn there, Chief Economist for Europe at Goldman Sachs. Now, coming up, President Trump says Hamas will disarm. More on the details of that next potential deal. This is Bloomberg. President Trump says his U.S.-led Board of Peace has reached a deal for Hamas to disarm, but there are questions about the extent of the agreement and when it will take effect. Now let's get more with Abir Abu Ammar in Dubai. Abir, good morning. What do we know about this deal?
Good morning, Francine. Not much is the short answer. What we know so far is that, as you have just mentioned, President Trump said that Hamas has agreed to disarm if Israel pulls out of the Gaza Strip. Hamas came out overnight telling Al Jazeera that it will only disarm, as a matter of fact, if Israel pulls out its troops. Now, we haven't heard back from Prime Minister Benjamin Netanyahu's government or whether that will actually happen, just bearing in mind that he has an election year ahead of him and it will be quite questionable on his party, from his party, if he does not get a deal that actually is in the interest of Israel. This is what a lot of analysts are saying. But when it comes to this deal or this potential deal, the exact details of it are not yet clear. What we understand from our sources is that it still needs a couple of weeks or so for the final details there to be finalized. It could take, Francine, up to 350 days to actually be implemented. So there's a lot of margin of error there to potentially happen. President Trump does say in his post that this will pave the way for a Palestinian government to rule the Gazan people and pave the way for a better future there. He also says that it paves the way for more security and peace in the Gaza Strip. Let's just bear in mind that this deal announcement, according to President Trump, is happening in the midst of a wider war that is taking place in the Middle East, of course, the Iran-US war. And so for President Trump, this is a small win, or this is what a lot of those political analysts are saying. He's in a desperate need for those wins, especially as the U.S.-Iran war drags on in the region with no clear end in sight. So short answer, again, is we still don't have a lot of details on what exactly this deal entails. We have a little bit of opposition from Hamas on disarming. As a matter of fact, they only say that they will do that if Israel pulls out of the Strip. And if history proves a lesson, Francine, that will be a difficult feat to actually accomplish.
And Abir, it's been a volatile week for oil.
Yeah, so another thing that we're watching very closely, oil, it's roaming at around $88 on the barrel now. We're seeing Brent down today, but for the whole month, it's actually up about 20%. And that is obviously as these escalations in the Middle East continue to happen, albeit a little bit calmer today. Francine, we're watching 2 straits now. We're watching the Strait of Hormuz, but also Bab el-Mandab in the Red Sea that's been prone or has been at risk of those attacks by the Yemeni Houthis. We're actually reporting on stories that Saudi Arabia is having to reroute some ships through African routes, Francine. It's obviously been using the Red Sea throughout the course of this war as a secondary route to the Strait of Hormuz. In the Strait of Hormuz, movement is picking up only slightly. We reported yesterday that an LNG ship flagged to Qatar was able to make its way through the Strait of Hormuz for the first time in 3 weeks. So slight movement there, but nothing really compared to the levels that those shipments were at pre-war.
Abir, thanks so much. Abir Abu Ammar there in Dubai. Now, the Spanish government has ordered troops to one of its 2 North African enclaves after a recent surge in illegal immigrants. Now, the migration crisis risks a flare-up in tensions with Europe across Europe, with Italy's Prime Minister Giorgia Meloni threatening to impose travel restrictions on Spain. Let's bring in Oliver Crook, our chief Europe correspondent. Ollie, how did the enclave find itself at the center of this real border crisis?
Yeah, Francine, really very interesting. So this part of Spanish territory, which is effectively attached to Morocco just across the Strait of Gibraltar, Ceuta, is where this is all happening and has been really developing over the last week, where you've had a surge of immigrants coming in illegally, swimming, climbing over the fence. And effectively, as you saw from those very dramatic pictures there, Francine, we should say a number of people have died in the attempt to do this, have basically totally lost control of the border. And there are thousands of people now, they don't have a really precise figure, that have streamed into this sovereign Spanish territory. This obviously is a massive concern for the Spanish government. We understand the Prime Minister Pedro Sanchez will go down to Ceuta today in order to visit and to inspect the situation. They will deploy the military, the civil guard, additional police forces, and their number one priority right now is to try to retake control of the border. And then they have a much bigger question, which is how to deal with this influx of thousands of people and where to send them. And the reason, Francine, that this is happening now, at least according to the foreign minister, is a court ruling that we got out of Spain over the last couple of days, which effectively barred Spanish authorities from blocking people from coming and sending them back on humanitarian concerns and those sorts of things. So as a consequence of that, now if you cross into Spain from the sea and you manage to end up on that territory, you get a lot more protections than had historically been the case, which is why this is now happening. This, of course, is causing some issues for Spain, some broader issues across Europe.
Yeah, I mean, the pictures are pretty incredible. I think 50,000 migrants, according to press reports, entered that Spanish enclave. So what kind of consequences could we see in European politics as a result?
Yeah, well, we're already hearing the sort of rhetoric. You know, obviously the context for this is that you have a socialist Prime Minister, Pedro Sanchez, who has been very pro-immigration. He's been trying to actually attract people mostly from Latin America, but actually in the end, most of them that go into Spain are actually from Morocco. And Giorgia Meloni, who was obviously on the right wing, was elected on a very anti-immigrant platform, now taking to Twitter and talking about potentially suspending Spain from Schengen. Now, it's not clear exactly what she means. There is prerogative for every individual nation within Schengen to basically instill border checks on their own borders. This happens fairly routinely. The Italians do it, the French do it, the Germans do it. It happens all over the place. But really, I think it's for Meloni a place for her to win some political points. Obviously, with those pictures, which are very dramatic, are going to sort of instigate a lot of anger among the far right around Europe. So really, Meloni is sort of an opportunity there for her to sort of potentially grandstand a little bit on that, though it does not pose a direct or immediate threat. We should still say this is still several miles off of the European continent.
Ollie, thank you so much. Oliver Crook, our chief Europe correspondent. Coming up, an earnings beat for Clariant. We'll speak to the chief executive shortly. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. A global rally in tech stocks gather momentum as South Korean equities jump by the most on record. Asia's gains follow the biggest rally in Wall Street chip stocks in more than a year. Amazon jumps on strong earnings. Apple falls on supply shortages. Plus, President Trump says the U.S.-led Board of Peace has reached a deal for Hamas to disarm, but questions remain over the extent of an aiming agreement. Now, Swiss chemical company Clariant has beaten profit expectations for the second quarter. Guidance for flat sales in 2026 remain unchanged as the company navigates a challenging geopolitical and economic backdrop. Well, we're delighted to be joined by Conrad Keijzer, the Clariant chief executive. Thank you for joining us this morning. When you look at the backdrop for a lot of the chemical companies, it hasn't changed. I know you've had a good, sound results. The Strait of Hormuz is still closed. So how much do you worry about costs going up in the next couple of quarters?
Yeah, what we see, good morning, Francine, regarding the Strait of Hormuz is we now are expecting a prolonged period of turmoil. The strait is not fully open yet, as you're well aware. What is different from a few months ago is that industry experts were expecting very high oil prices, $150 per barrel or even higher. That has not materialized. So global oil and gas markets have proven to be much more resilient than people thought. So we are expecting prolonged turmoil in the Strait of Hormuz. But in terms of impact on oil and gas prices, we basically no longer have scenarios with oil pricing well above $100 per barrel. We are seeing, though, continued elevated prices in downstream products from refineries, from crackers. Keep in mind, Strait of Hormuz, not only 20% of global oil and gas export, but also when you look at base chemicals, petrochemicals, roughly 20% of global production came from the Middle East, and there is not that resilience, that spare capacity in those markets.
But give us a sense of how much energy prices, but also shipping and logistics costs have impacted you.
Yeah, they have obviously impacted us, but what is very positive is that we have been able to more than price through year to date the impact of increased raw materials, increased energy, increased freight prices. If you look at it in the quarter, we saw actually elevated raw material costs, 7.4% compared to the same quarter last year, but we have actually fully priced that through to our customers. We are truly specialty chemicals. We are generating significant value to our customers, and it allows us to pass on these raw material cost inflation.
There's also extra tariffs that we heard from the U.S. last week. I think Switzerland is now 12.5% compared to Europe at 10%. First of all, is that frustrating, being a Swiss company? And again, what kind of impact would it have on your return longer, from here until the end of the year?
Yeah, the impact is very modest because we have actually 68 sites globally. We typically produce in a region for a region. It is somewhat surprising that we're facing tariffs in the context of forced labor. I mean, there obviously is no forced labor, not in any of our sites, but also not in our supply chain. The difference between the 12.5% is that apparently the judgment of the United States is that Switzerland is not enforcing enough these forced labor law in its imports. I can assure you that both Clariant as well as our peers here in Switzerland were obviously free of forced labor.
But I mean, does it again? Is a change from 10 to 12.5% impactful? Regardless on whether there's a basis for it, it means that there's a higher franc to contend with. Just how much does it complicate it, that 2.5%?
Sure. Yeah, well, for Clariant, it is not material. We have basically 68 sites, manufacturing sites globally. Only one of them is in Switzerland. For some colleagues here in Switzerland who have their manufacturing predominantly in Switzerland, this is obviously a bigger impact, but for us, it's not material.
So yesterday there was a big ruling, of course, in your favor. What does that mean going forward? Does it make you're expecting also other rulings that you're waiting for? Are you more positive on the outcomes for those results coming?
Yeah, a big step forward yesterday. The courts in the Netherlands, actually a very positive ruling for us. The claim from Shell, more than €1 billion, has been dismissed on all aspects in the Dutch court. This is actually a very positive development for us. It related to a legacy topic, an ethylene cartel. It's very positive that the judge in the Netherlands has assessed that there had not been an impact by the cartel behavior on ethylene pricing.
I mean, your share price flew yesterday. Are you worried that it makes you more of a takeover target? It must be great relief, but how does it change, the proposition of Clariant going forward?
Yeah, it is very positive to see the reaction yesterday. The share price up 16%. It basically tells the story that there was a significant overhang from these ethylene claims in our share price, which we have said all along. And we're very glad to see that actually moving out now.
And so you don't think it makes you more of a takeover target now that the overhang is gone?
No, we think in terms of the whole situation with the overhang from ethylene on our share price, it has never impacted us, neither from an operational point of view. We always basically had very strong liquidity. We basically have a strong investment grade. It never has impacted the company, neither operationally nor from a strategic perspective. We've always been able to do bolt-on M&A. It has not been constrained by this overhang in the share price from these ethylene claims.
Okay, thank you so much for spending a bit of time with us today. That was the Clariant Chief Executive, Conrad Keijzer. Now, France's Crédit Agricole and British lender NatWest posted results ahead of expectations for the second quarter. NatWest raised its guidance, citing its takeover of wealth manager Evelyn Partners, while Crédit Agricole reported a record results in its asset management arm and income growth in its French retail business. Let's bring in Philip Richards, senior analyst at Bloomberg Intelligence. Thank you for joining us. What actually have we learned from these two banking reports this morning?
Yeah, good morning. All week has been dominated by the investment banks and how strong the trading has been. And what we've seen today from more retail focus, corporate as well, but mainly retail focus, that these banks are actually doing very well as well. The revenue line is coming through very strongly. Credit risks are very low. So actually, it's not just investment focus, it's across the board in banking.
And so through this earnings season so far, how is Europe doing compared to Wall Street?
Yeah, well, overall it's doing very well. I mean, if you look on revenues and cost of risk, so, almost every bank is beating, essentially. In the bottom line, EPS, every bank has beaten consensus. So they're doing very strongly. How are they doing versus the US banks? I think it's a different story, because of the US are doing so well, particularly on the trading side. So if you look at equities trading or fixed income trading, then actually in both cases, the US banks are doing a lot better than the Europeans. So there they are losing share, and that's a concern.
Philip, thank you so much. Philip Richards, their senior analyst at Bloomberg Intelligence. Now, the Bank of England has kept UK interest rates steady at 3.75%, with Governor Andrew Bailey insisting his committee is not getting closer to a hike, despite 3 members voting for tighter policy. Well, I spoke to Governor Bailey about how policymakers are navigating uncertainty.
There are 2 things, I think, that shape my thinking, certainly. One is obviously is the one that's shrouded in so much uncertainty. It's where are these events in the Gulf going to go to? And then the second question is, for any sort of given set of events, how are they going to feed through into domestic inflation? Now, we start in a position where it's come in lower than we thought it would. We're below where we thought we would be if you go back to April. But you can't take too strong a message from that in terms of second round effects going forwards, because frankly, this is a very unprecedented situation.
Governor, if you look at market bets, they reduced bets on a hike in September. We're now at around 33% chance. Yeah. Are you content with that?
I think the market pricing is sort of sensible.
So that's where you would lean towards.
The reason I say that is because when we survey the market, what the market tells us is that their sort of, if you like, their central expectation is for no change. But then they say, yeah, but there's a risk on the upside. And you can see that built into market pricing. And I think that, as I said in the press conference earlier, I think that fits with the fact that we've got 3 scenarios. We've got less probability attached to any one of them, frankly, than we probably normally would. But the adverse scenario is further away from the centre than the lower scenario. And the adverse scenario basically is a scenario which says if this breakdown of the ceasefire continues as a permanent thing, then we're going to have higher energy prices, and that will have an effect.
But, Governor, we've also seen some new language, right? So the 6 members who held rates said the policy strategy could change if upside risks to inflation were to subside. So can you tell us a little bit more about that?
Yes. So I think if, however, we were in a position which we were when we started the meetings for this round, where the Memorandum of Understanding and the ceasefire was holding, and we had a crude oil price, I think, briefly down to somewhere not much above $70 a barrel, just a bit higher than it was before the conflict, but not a lot higher, then yes, I think we're looking at a different situation. Now, sadly, of course, that hasn't held.
But that's what, very unpredictable at the moment, or
Yes.
are you expecting? So it could flip, and what happens if it flips from one to the other?
Well, I think there's two things going on. So if we got into a situation where the ceasefire is in place again, I don't think it's unreasonable to think that whether they come down as much, we'll see, but they come down again. But then the problem we've got is the sheer unpredictability of this, because this is what we've learned again in the last week, 2 weeks, 3 weeks.
Governor, your central projection shows unemployment peaking around 5.5% in 2027, a rate that we hadn't seen since 2015. A weaker labor market is helping, of course, to contain the second round inflation. Yeah. But at what point does it cost in terms of jobs?
Well, I think we are seeing softness in the labour market. We are seeing something of an output gap opening up, and that is reflected in the labour market. So I think it's exactly consistent with what you say is in the projections. Obviously, we don't want to see that happening. And one of the things I would say is that we don't have a dual mandate, and I like our mandate. What our mandate has in it, though, is what we call trade-off language, which is we've had another negative supply shock. Pushes prices up, activity down. Our job is to return inflation to target, but that language, that trade-off language, gives us some flexibility as over what period we return it to. We obviously have to look very carefully at things like inflation expectations, but it is in our mandate, and I think we must use that where we think it's appropriate to.
You've met with the new Chancellor. Do you think your mandate could change under this Prime Minister?
I've had no discussions on that at all, so I don't think that's anything that we should speculate about. I've not had that discussion.
I know you don't like talking about fiscal policy, but what does the uncertainty of the budget in autumn mean for the next couple of months?
Look, honestly, I don't go into this autumn in any different position than I normally do. Well, I know there's going to be a budget towards the end of the autumn, because that's the way the UK cycle works. And so we condition our monetary policy decisions on announced fiscal policy. We'll do the same again.
Well, that was the Bank of England Governor Andrew Bailey. Coming up, as FIFA vows to press ahead with controversial plans to seek private investments, we speak to former England international and Mercury 13 investor Aluko. That's coming up shortly, and this is Bloomberg.
We've put a lot of measures in place in order to help the people with fast claims payments, with relocations, and simplification of the procedures. Obviously, the question will come, how much will this all cost? But this is far too early because, these have just happened. If you go back over the last 3-4 years, we have had many of these events, and all of these events, yes, have touched us, but have touched us in a way that we have always well managed and absorbed.
Well, that was Thomas Buberl, the AXA chief executive, on the impact of wildfires in Europe. Now, a group of scientists has warned that climate change made the weather that fueled Europe's recent wildfires significantly more likely in France and Spain. Well, the alert from the World Weather Attribution Group comes as fire crews are tackling blazes in England and Greece. We can bring Joe Wirtz, our climate reporter. Joe, thank you for joining us. So how severe have the blazes been across Europe this summer?
They've been very severe. The fire season in Europe started early and ramped up quickly. The fires have been big and fast moving. They have also erupted near major population centers, which is worrying people on the ground there. And the fire behavior has really changed this year. Firefighters on the ground reporting, they're seeing fire activity like they just have never seen before. And in some cases, this is so intense and so strong that these fires are actually warping the weather around them. These are creating, firestorms on the ground that just really haven't been seen in Europe before.
So, Joe, the heat, has seen water levels also in the Danube and some of the Rhine River drop to an unprecedented low. What kind of impact is this having?
These are our key transit hubs for commodities, grain, and energy. They're also used to cool nuclear plants. Hungary's had to take emergency measures to shore up pumping stations and emergency pumping stations to keep water flowing through its only nuclear reactor there. And it's led to limits on the amount of cargo that you can push in those rivers and real navigation problems because the levels are getting so low.
Joe, it's such an important story. Thank you so much for joining us.
Thank you.
Of course, we'll push this out on social media. Our climate reporter, Joe Wirtz. Now, FIFA says it will proceed with a consultation on its controversial plans to bring private investments into the World Cup and other football tournaments. Well, Europe's football governing body, UEFA, says its members will boycott all FIFA tournaments, while federations for Asia and North America have also signaled their opposition to the proposal. Well, I'm very delighted to be joined by Aluko, investor in Mercury 13, former England international football player. She's also on the CAF Women's Task Force. It's such a great pleasure, first of all, to have you here. I mean, this UEFA-FIFA standoff is a big one. If this continues, it's likely that women's events will be the first real testing battleground for it. I mean, how do you feel about that? Does it prove the importance of the women's game, or does it just bring unwanted pressure?
Well, yeah, I think the women's game is an integral part of global football now, you know, whether that's the World Cup or the European Championship. So that includes UEFA. But I think UEFA's stance, I think, really shows the lack of consultation, the completely, the diametrically opposed positions for UEFA and for FIFA, and the fact that Infantino seems to be doing things and making decisions without the consultation of major member associations like UEFA. And frankly, I think once UEFA's not on board, the value of the World Cup diminishes anyway. Out of the last 4 teams at the World Cup, 3 were European. So I think UEFA's protest means that these proposals cannot go forward, unfortunately.
I mean, did you have concerns from the start? What kind of impact does this have on competitions if the Infantino plan, if we're to call it that, goes through?
Well, look, I think the privatisation and commercialisation of football has been happening for a long time. And the proposal in of itself to sell the World Cup to private investors, I think is a continuation of what we've already seen. I think where there's a big problem is the affiliation with politics and the fact that it's, Trump's associates that might benefit, who might be the private investors. That's where I think the integrity of football becomes questioned. There are rules around fit and proper persons test. There's rules around who can own in football, and I think that's where you really question the integrity of the sport. Fans are becoming much more isolated from any of the decisions that FIFA are making. I think from a PR perspective, FIFA should really start thinking about the fans. If they came out and said, right, we're going to generate $4 billion from this commercial proposal and we can subsidise tickets for the next World Cup, it gets received in a much different way because you're centering the fans. I think what we're having is a conversation about a billionaire class taking over football, and the stakeholder fans and some of the member associations get completely isolated.
I mean, if you look at the commercialization, do you worry about, is it ticket prices we should worry about the how often these competitions, like there's a whole ecosystem that we have now that could potentially change?
Well, if you look at the last World Cup, fans were outpriced. I was there in the US, and a lot of people could not afford to even go to the games. So that needs to be taken into consideration whenever there is a proposal to generate more money. How does that impact the fans who are the centre of the sport, right? So I would like to see that, for the next World Cup, okay, generate money commercially, that's fine. That's what football has done for many, many years. But how can that benefit the fan? How can that subsidise tickets for the fans so that everybody becomes more on board and there's more of a collective approach, rather than it feels as if it's benefiting, the sort of billionaire class and politicians, and it feels very isolated. I think that's where Infantino has gone wrong. There has to be more of a consultation around the fans, but also around, the member associations, important member associations like UEFA.
Do you think CAF, which is the African UEFA, will vote the same or have similar feelings to UEFA?
Well, I think the proposal is that, if the member associations get on board, 40 million will be distributed from this proposed plan. 40 million to African member associations is very, very important for the sort of development of football and the infrastructure. 40 million to the African member associations is very different to 40 million to UEFA. So it's all relative, and so I'm not surprised to see CAF hold back a little bit and say, actually, let's have a conversation, because I think the money that's proposed actually could really be beneficial for African nations. But ultimately, if UEFA are not on board, the World Cup diminishes anyway. I think the value, and so I would like to see a different iteration of this idea. All member associations get back to the table, come up with a different proposal that feels a lot more collective in its approach.
Do you think FIFA and Gianni Infantino will back down?
I think they have to. I think if UEFA have taken such a strong stance, and as I said, UEFA are very, very important to the overall value and position of global football. I think they have to change. The proposal has to change, and they have to sort of come together and come up with a different proposal. I would like to see the fans considered much more in whatever the new proposal is. We saw a few years ago with the Super League proposals, it got widely rejected, same sort of outrage. But there was a different iteration that came with the Champions League a few years later. Champions League changed, then the Club World Cup changed. So I think from this position, you can come up with something better that feels more of a collective approach. And I hope that, you know, the fan as a stakeholder is considered within that.
And you've been such an icon, right, on this field, but also what you've done for women's sports and investing in it. How do you see, where's the money coming from now? I mean, away from what FIFA is trying to do you see more, you know, big sports investments in women specifically coming from the US or Asia, or how's that dynamic changing?
Well, you mentioned obviously that I'm part of Mercury 13, a global women's investment group, multi-club investment group. Private investment is coming into the women's game, which is very, very exciting. It hasn't always been that way. Lots of multi-club investment, lots of new investors coming into the sport, lots of brands, commercial activity. So it's in a really healthy place. It's very exciting to be part of. Great leagues like the US, obviously the WSL in the UK are really growing rapidly. There's development in Africa as well. The women's AFCON is currently playing now. So there's lots of growth on the women's side that is now part of the wider, football ecosystem globally as well.
I mean, I know there's concerns about, the players just playing too many games and risking injury. If you look at the ecosystem, what's your main concern about how we're playing football right now?
Yeah, that always has to be a consideration. The player welfare, the amount of load on players with the new competitions coming in, that has to always be balanced with, the desire to generate more revenue and build more competition. Women's World Cup is next year, which is going to be very exciting in Brazil. But the players always have to, we always have to keep an eye on the fact that the players play so many games now, particularly players at the highest level who are playing in the Champions League as well.
I mean, a couple of years ago, everyone was talking about the Super League, and there was a real uproar from fans. Do you think something like that could ever come back in a different iteration?
No, I don't think so. I think the idea that sort of you can have breakaway leagues, I just don't think it works within an ecosystem that's so historic. Football is such tradition. And so I think whenever there's new ideas, there has to be a collective approach. You cannot have, one president doing something over here and someone doing something over here. It has to be more of collective consultation. I think that's where Infantino has gone wrong on this occasion, lack of consultation. But it does allow you to come back to the table and have a different conversation and say, okay, how do we get to this outcome of more commercial revenue for the World Cup? And how does that benefit all of us, including the fans?
Thank you so much for coming on with us today. That was Aluko, investor in Mercury 13, former England international football player, and a member of the CAF Women's Task Force. Up next, it's Bloomberg Brief, and this is Bloomberg.